Welcome to today's Explainer. We are going to unpack 15, yes, 15 different ways to retire early and achieve true financial independence. Most people have really only ever heard of one or two of these methods, but we're going to break down every single strategy out there. And to make this super easy to digest, we're plotting them on a gamified 30-year timeline for a hypothetical person making about $100,000 a year. As you'll see, some of these paths can actually get you there in under 5 years, while others are going to take the full 30. So, before we jump right in, I want you to keep this one central question in the back of your mind today. Are you willing to make some pretty extreme sacrifices to hit financial independence by, say, year 9? Or do you prefer the comfort and stability of waiting until year 22? Honestly, the timeline is entirely yours to play with. To keep everything crystal clear, we've organized these 15 strategies into 6 distinct eras: setting the FIRE baseline, the ultra-fast lane, hustles and hard sacrifices, geography and lifestyle hacks, building passive income streams, and finally, playing the long game. Let's get to it. Okay, starting with section 1, setting the FIRE baseline, the foundation. We need to establish exactly how traditional early retirement actually works. So, traditional FIRE. This is the original recipe for early retirement. It fundamentally relies on saving a massive chunk of your income. We're talking 30 to 50% here. Investing it in low-cost index funds and following an absolutely crucial concept known as the 4% rule. See, about 30 years ago, a financial advisor named William Bengen crunched the historical market data and found something amazing. He realized retirees could safely withdraw 4% of their portfolio every single year without going broke, even through the absolute worst market crashes. The portfolio's growth essentially just replenishes whatever you take out. Right, so what does this mean for you? Well, to actually use this 4% rule, you just take your desired yearly spending and multiply it by the magic number 25. That gives you your target portfolio size. So for example, if you figure you can live a comfortable lifestyle on $40,000 a year, just multiply that by 25. Boom, you're going to need a $1 million nest egg. For our hypothetical person earning $100,000 a year, achieving this traditional FIRE lands right here at year 16, assuming, average savings rates and normal market returns. So year 16 is our official baseline checkpoint for the rest of this explainer. Let's see which strategies can beat year 16 and which ones take a little bit longer. Moving to section 2, the ultra-fast lane. High risk, high reward. Let's look at the absolute fastest possible way to beat that year 16 baseline. Entrepreneur FIRE is literally the fastest path on the board, aiming for a wild year 3. Instead of slowly saving your way to retirement, you're spending your nights and weekends building a business. Maybe it's an e-commerce brand, a SaaS product, or a content agency. If you manage to sell it for $1.5 or $2 million after just a few years, technically, you're done. You'd for sure want to shelter that sudden income in a solo 401k or a SEP IRA, but you probably noticed that massive asterisk there, right? This path is incredibly volatile. You might catch lightning in a bottle, or you might just spend 3 whole years losing your money and your sleep. All right, section 3, hustles and hard sacrifices, the grind. If you really don't want to rely on the wild card of building a business, these next paths are guaranteed to beat the baseline, but they're going to demand some heavy early sacrifices. Here we've got 2 wildly different alternatives. On the left, we have Coast FIRE, which lands around year 7. The strategy here is brutal early saving. I'm talking banking $40,000 a year for 5 solid years until you hit a specific checkpoint. Once you hit it, you just stop investing completely. You downshift into a super low-stress, chill job just to cover your daily living expenses, and you just let the magic of compound interest grow that initial nest egg in the background until standard retirement age. Now on the right, we have Digital Nomad FIRE at year 8. This offers a much gentler lifestyle today. You save moderately, but you build a remote freelance or consulting income which lets you work on your own terms from lower-cost areas around the world. It prioritizes your freedom and flexibility right now rather than front-loading all the pain. Smack in the middle of those 2, landing at year 9, is Extreme Frugality FIRE. Now, this one requires you to drastically slash your consumption down to the absolute lowest sustainable level. Think living with multiple roommates, cramming into a tiny shoebox apartment, and being that coworker who eats the exact same $1.25 meal of lentils and rice every single day. If you can force yourself to live off just $30,000 a year, your target nest egg suddenly drops to just $750,000. Our 100K earner can reach that in about 9 years of saving $50,000 post-tax. But the massive catch here, you have to maintain this extreme bare-bones lifestyle indefinitely.
Which brings us to Section 4, Geography and Lifestyle Hacks, Creative Exits. Look, if that $1.25 lentil meal sounds completely miserable to you, let's explore how clever lifestyle design can lower your target number without starvation.
I absolutely love the math behind Barista Fire, which lands at year 10. The whole goal here is to leave your high-stress corporate job and pick up a fun, flexible, part-time role. Maybe you become a Starbucks barista or a driving range attendant at a golf course where you get free tea times. So if you want to spend $50,000 a year and your fun part-time job pays $20,000, your actual income gap is only $30,000. Multiply that gap by 25 and your target nest end drops to just $750,000. Plus, and this is a real game changer, a lot of these corporate part-time roles provide subsidized health insurance, which is huge.
Next up, we have geography hacks. Geo arbitrage is where you keep a high-income domestic salary, like say a San Francisco tech wage, but you actually relocate to a much cheaper city like Boise, Idaho. It allows your dollar to stretch significantly further. Expat Fire is the permanent international version of this. You move abroad long-term to incredibly affordable places like Portugal, Mexico, or Thailand. You establish residency and navigate their local healthcare systems. By dropping your living costs from, say, $60,000 in a major U.S. city down to $35,000 abroad, your target portfolio instantly drops from $1.5 million to just $875,000. So let's map this whole era out on the board. Barista Fire hits first at year 10. Then we have Hybrid Fire around year 12. This is very similar to Barista Fire, but instead of retail, you use knowledge-based consulting or freelance gigs to cover that income gap. It's slightly less consistent, so it takes a bit longer. Geo and Expat Fire hit around year 13. And finally, Lean Fire comes in at year 14. Think of Lean Fire as the sustainable version of extreme frugality. You spend about $40,000 a year, you're still cooking at home, but you allow yourself occasional budget trips and maybe a gym membership. It takes a few extra years, but man, the quality of life is dramatically better. All right, Section 5, Building Passive Income Streams, Cash Flow Focus. As we cross our year 16 baseline, we completely shift our focus away from just aggressive saving and over to generating pure passive cash flow.
First up in this era is Real Estate Fire, landing right around year 15. The most common method here is called house hacking. Basically, you buy a duplex using a low down payment FHA loan, you live in one unit, and you rent out the other. You just rinse and repeat this until you have 3 to 5 units generating enough cash flow to fully replace your salary. The pros? They're fantastic. You are heavily leveraging the bank's money to acquire appreciating assets. But look at the cons. You're going to be dealing with 2 a.m. washing machine repairs, which, by the way, almost exclusively happen on holiday weekends, plus general vacancy risks. For a lot of people, you aren't really retiring early, you're just trading your day job for the job of being a full-time landlord. A slower but honestly highly appealing alternative is Dividend Fire, landing at year 22. Here, you build a massive portfolio of dividend-paying stocks, and you live entirely off the passive income without ever having to sell a single share of your principal. To generate $50,000 a year at a realistic 4% yield, you'd need a $1.25 million portfolio. Yes, it takes 20 to 25 years for our 100K earner to get there, which is technically slower than our traditional FIRE baseline. But psychologically, knowing your portfolio just spits out cash and your underlying principal is totally safe helps a lot of people sleep incredibly well at night. Finally, Section 6, Playing the Long Game, Comfort and Luxury. Our 6th era stretches beyond 2 decades, and it focuses on maximum safety, career consistency, and in some rare cases, extreme wealth. Landing at year 25, we have Pension Fire. Now, this one is entirely unique because it literally has nothing to do with the stock market. You work a government, military, or union job for 2 or 3 decades, and in return, you get a guaranteed monthly check for the absolute rest of your life. Zero market stress whatsoever. Then at year 27, we have Slow Fire. This is the exact opposite of that extreme frugality we talked about earlier. You only save a very manageable 15 to 20% of your income. You intentionally choose to enjoy your youth, travel, and not sacrifice your best years. Sure, you might retire at 58 instead of 35, but it is highly sustainable and deeply realistic for most people. And brilliantly pushing completely off our 30-year timeline altogether is Fat Fire. Guys, this is financial independence on steroids. It's the version of early retirement literally everyone fantasizes about. You're building a massive portfolios. We're talking $5 to $10 million or more to fund pure luxury. You're spending hundreds of thousands a year on global travel, multi-million-dollar homes, and crazy high-end hobbies. But the reality check? At $100,000 a year salary, this is virtually impossible, unless you just strike it exceptionally big.
Fat FIRE generally requires VP-level tech salaries, doctor incomes, or selling a wildly successful business. It's an amazing goal, for sure, but it sits way out there in years 28 to 35 and beyond.
Well, we've just navigated 15 completely distinct paths to financial independence. The ultimate takeaway from this explainer today is the incredible power of choice. Financial independence isn't just some boring math problem, it's a completely customizable lifestyle design. So knowing the unique sacrifices and the rewards of each path, are you rushing for the absolute freedom of year 3, or are you happily enjoying the scenic journey to year 30? Which year on this timeline are you going to claim as yours?